Strong flow momentum has given Quilter a boost. The wealth management company experienced this across its business in its first half. As a result, total assets under management and administration grew by 6% during the period, while net inflows of £4.5 billion came in at the top end of analyst forecasts. Revenue ticked up by 2% and adjusted profit before tax by 3% to £100 million. The company expects second half adjusted profit to be broadly equivalent to this first half level. A dividend of 2 pence has been declared, reflecting an increase of 18%. Glencore has had a tough first half. The diversified miners' loss attributable to equity holders nearly tripled to around 12 billion rand during the period, while net debt grew by 30%. This as weak coal prices and a slump in copper production weighed. The coal price has fallen by over 21% in the last year due to the impact of trade wars, policy uncertainty and investment in renewables, which has lowered demand for the fossil fuel. Copper production, however, is expected to lift in the second half. Looking ahead, the International Energy Agency forecasts that global coal production will also continue to grow this year as demand for the fossil fuel remains at record highs despite geopolitical noise and climate mandates. Sirius Real Estate is doubling down on its expansion strategy. The London and JSE-listed group acquired a business park in Dresden, Germany for €2.4 million and one in the UK, Bedford, for £16.3 million. Its acquisition in Dresden will be converted into a multi-let industrial park in an area experiencing robust investment in the semiconductor sector. The Bedford Heights Business Park, in the meantime, is 96% occupied, and its largest tenant is an electric components manufacturer. Adding these assets to its portfolio forms part of Sirius's ongoing strategy to strengthen its market position in these territories. Jubilee Metals' Zambian copper venture is struggling. The unit reported a slip in output post-recovering from power outages earlier this year. Copper output plunged by 35.4%. This week, annual operational performance may reflect a hiccup in the miner's copper-driven growth ambitions and impact its restructuring plans. The Metals Recovery Group plans to exit South Africa in the next few months. An undisclosed buyer set to take over its local chrome PGM operations in the country. Growing consumer appetite for online shopping is fueling a fresh crisis in the clothing industry. A study commissioned by the Localization Support Fund warns that this trend puts more than 34,000 local jobs in the sector at risk. The research reveals that offshore e-commerce giants Shein and Temu are rapidly eating into the market share of local retailers and manufacturers, pulling billions in consumer spending away from domestic value chains. Last year, these platforms raked in an estimated 7.3 billion rand in local sales. That's more than a third of all online clothing purchases in the country during that period. The economy showed more signs of resilience in July. This according to the Bankserv Africa Economic Transactions Index. The widely watched measure of economic activity rose for the third consecutive month during the period, ticking up by 0.2% to 139.3. Boosted by electronic transactions reaching a new record and other key indicators turning positive despite persistent headwinds from global uncertainty and trade tensions. Structural factors like easing inflation also continue to support the economy, which is expected to produce a better growth rate in the second quarter. In international news, Walt Disney-owned ESPN is acquiring NFL Network and other media assets from the National Football League. In return, the NFL will receive a 10% stake in ESPN, marking a significant shift in the sports broadcasting landscape. Here's more on this in this detailed report.
Disney's ESPN reached a landmark deal with the National Football League to acquire NFL Network, as well as other league media properties. In exchange, the NFL will take a 10% equity in the sports network. Both parties confirmed the deal, which is still subject to regulatory approval. The Athletic, citing sources, reported it could potentially be worth billions of dollars. ESPN declined to comment on the figure, but said the deal would bolster the offerings on its upcoming ESPN streaming service, which will cost $29.99 per month and could launch by the end of August, according to Disney CEO. It will provide access to ESPN's popular studio shows, as well as its wide portfolio of professional and college sports. Under the new agreement, ESPN would own and operate the TV and streaming rights to the NFL Network, which would continue to carry 7 games a year. Meanwhile, the league will continue to own, operate, and produce NFL Red Zone, a service that allows fans to watch scoring highlights. The league will also retain ownership of certain media properties, such as NFL Films, and platforms such as the NFL Podcast and NFL Plus.
Meanwhile, Novo Nordisk is to cut costs as the Wegovy maker battles competition from rival Eli Lilly and copycat versions of its obesity drug, with lower growth expected for its treatments in the second half of the year. Here's more detail.
Novo Nordisk said it would cut costs as it takes on growing competition. The Danish firm faces a growing challenge from US giant Eli Lilly, as well as copycat versions of its own Wegovy obesity drug. Now, Novo expects lower growth for its treatments in the second half of the year. The firm became Europe's most valuable company last year, worth some $650 billion, due to popularity of its blockbuster weight loss drug. But shares have since tumbled, and it now faces a key moment as competition surges. Novo warned on profits last week and replaced its CEO, moves which wiped $95 billion off its market value. The company repeated its full-year guidance a day before CEO Maziar Mike Doustdar was due to take charge. He faces tough questions about how Novo can stay competitive in the booming weight loss drug market. The company confirmed a sales growth forecast for the year of between 8% and 14%. That was down from the previous forecast of up to 21%. And the second time this year, the company has cut its outlook. Novo reported second quarter sales of close to $12 billion, up 18% from last year, but below analyst expectations.